Well, inflation obviously is at a 4-decade high, and the Federal Reserve is expected to raise its benchmark interest rate for the 4th time in as many months. Now, economists are predicting another 75 basis point hike, which would be the second one since June. And that would make the target range for the funds rate between 2.25% and 2.5%. That's a level considered neutral. And that means the Fed wouldn't be supporting or restricting economic growth. But this move would slow down the economy and decrease spending, making it more costly to take out a loan. And White House economic advisor Brian Deese says this is part of their plan.
We are seeing a slowing. That is not only expected but necessary as we operate through this transition.
And credit card interest rates will also go up. Right now, they're at about 17%, and the Fed will likely reiterate that future rate decisions will depend on its economic outlook, particularly on inflation. Now, the Fed will likely also be talking about how they're going to combat inflation. They think that they're not going to even have a recession with this move, but that is not the case, according to former Treasury Secretary Larry Summers, who's also the former top economic advisor for Barack Obama. This is what he told CNN.
I think there's a very high likelihood of recession when we've been in this kind of situation before. Recession has essentially always followed when inflation has been high and unemployment has been low. Soft landings represent a kind of triumph of hope over experience. I think we're very unlikely to see one. There's also a greater risk of stagflation and this episode being with us for some number of years than the market is currently discounting.
So the Fed expected to raise interest rates by 75 basis points today. And in his remarks, watch for Chairman Powell to be a bit less specific about potential future moves that would allow them more flexibility for further changes down the road. This will not be the final interest rate hike of the year. Bob, Katrina, back to you.
Indeed. How right you are. Thank you very much, Logan. And the Federal Reserve has raised rates 75 basis points, which is 0.75 percentage point. We expected that to happen. But still, this is a direction that it looks like they're not stopping anytime soon. Many economists and investors wonder just how far the central bank will go in its quest to tame inflation. How high could it get? There are some people that say our inflation's at 9%, and we need to be higher than that to stop things. Don't know if that's where we're going, but definitely 75 basis points a day.
Hey guys, it's Rob Carson. I want to tell you about the Patriot Gold Group. But first, let me tell you that the S&P has already lost $8.2 trillion in 2022. Did you know that? Peak inflation is not even hit despite the Fed rate hikes on groceries, on gas. You know it as well as I do. Morgan Stanley and Goldman Sachs are warning of another 20% drop. Inflation is winning in a knockout right now. The Fed is going to raise rates again at the end of July. Meanwhile, Goldman, Wells Fargo, and Bloomberg are all forecasting gold to surpass all-time highs. If you want to invest in gold, call 888-936-2373 now. Call the Patriot Gold Group today and ask about their no-fee-for-life IRA. Sounds like a good deal, don't it? Here's the number, 888-936-2373. 888-936-2373 for the Patriot Gold Group.